with Yieldly. I remember I was following the tokens and I saw them dilute it by like 9% on a day. And I'm going, hell no.
Getting out of there. Yeah, so you sold at a good spot. And then
I saw them, I saw them diluting and there was no news about it. Algorand. So what we have here is you have the Algorand price, which is in the candles, but then you have the market cap, which is in the blue.
The blue, yep.
Yeah, and I have it better on another slide. But as we can see, there's a big change there. There's wide differences. And as you look from Fed to April, when we had that first run up and then we had that big crash.
Oh, that was a nice run too.
That first one. Well, during that time from February to April, they diluted the tokens by 99%. They added 1.4 billion to the supply at that time.
And that was the accelerated vesting, right?
Exactly. Yeah. That's what we're seeing as accelerated vesting. Mm-hmm. Then you can see again, they do some token dilution on August 27th, 12%. They had about 406 million. And then again on the 9/28, another 13% dilution. And then the big one, I think, I don't know if that was accelerated vesting, because accelerated vesting should have been a little earlier than 10/8, because I remember the big run up, it hit the accelerated vesting mark. But we diluted 24%. We added another 1.1 billion. So from basically end of August through today, we had 112% dilution in the stock price, or in the tokens.
So essentially, double the amount of tokens are now on the market.
So it's like what we talked about the Fed.
Yeah,
they're adding tokens to the supply, making each token weaker.
Yep.
So if you pull up,
I see you. So we were at what, $2 in November.
So as we see this is different. The white is the Algorand stock price. So if we look back around, we'll say August, where we had that run up.
Yep.
So the token was $1.08 around that time, but the market cap of Algorand was only 2.9 billion.
You said 2.9
billion at $1.08. Now, fast forward and all that dilution, we have the same token price of $1.08, but the market cap is 6.9 billion. So even though the price has collapsed, the market cap is higher. So technically the company is more valuable.
Yeah, at these low prices.
Yeah. So what happened is people are following this token price. And could you pull up as we can see here on August 20th, the circulation of supply is about 3.2 billion. We had a price of 112. And the market cap was about 3.6, which is, market cap is your price times tokens.
Circulating part, yep.
So around 9/14, the stock price, or the Algorand price, was $2.03. We had about 3.8 billion circulating. We had a $7.8 billion market cap. But spring up to yesterday, we have a token price of 112, but now we have 6.7 billion circulating, which gives us the same market cap roughly as we had back in September. So even though we're down big, $1, you're down like nearly 100% in your token price.
Yeah.
Algorand stock, the market cap went up.
That's good. That's bullish for me.
Well, but if you held the tokens, you lost 100%.
You lost value for sure.
So for anyone, it's good. I mean, it's bad for you because
it's bad.
Yeah, because you lost 90-some%, and the company got more value, gained value, but you lost value at that expense. Because there was about 3.4 billion added, or 107% token inflation from that time. So what would it take to reach that 2.03 that we reached back in middle of September? Well, if we take the current times that, just in a vacuum, we have 6.7 times 2.03. It would take a market cap to be 13 billion just to reach 203 again.
We've reached 13 billion before, I feel like.
Right, but now it's getting harder. It's getting harder because when there's more and more supply, it's more and more weight you got to push up.
Facts,
so it's going to be, but then if you go on TradingView and you're looking at 2.03 billion, it says it only needs 11 billion to reach 203. So what happened? Well, the difference between that market cap is about 2.41 billion, as you can see on the bottom right.
Yep.
But this is where the staking of this is where the algo staked comes in. Just on my raw calculation, it would be 13 billion. But when you take about 2.09 billion that's currently staked, about times $100.12, that's about $2.3 billion. So now we're just in a rounding error of net difference.
Mm-hmm.
So
when you talk about staked, you're talking about like the governance.
Yeah, governance or things like that. That's out of sort of supply. So that's why when I calculate it gives us 13, but the actual real one is based on staking, which can change. But the point of the matter is to get to where you were, it's going to take you nearly double the market cap to get there.
So we all got to buy double.
Well, somebody does. So go on over. Do you know where the one where it said C Will coin? Passive income coin. So this is a nice, easy example of it. So look, if you said, hey, you know what, I'm going to start up my own network. I'm going to start with 1,000 tokens at $1, and that gives you $1,000 market cap, each one worth $1.
Yeah.
And you know what? It's growing a little bit, and people are like, man, and you're like, I need more money to set up a new studio. Well, I can add some tokens to get some money right there. So you double the amount, and the price went up to 100%. So now your market cap, even though your price went from 1 to 2, your market cap went from 1 to 4. So the token price got 100%, but your market cap gain was 300%.
That's because you were entering another 2,000.
You're adding new coins to circulation because market cap is the tokens available times the price. So even though you added just another 1,000 tokens, when the price went up, it served as like rocket, went to 300%. But let's say the 2,000 tokens you added and the price fell back down to $1 where it originally was. The price is unchanged, but the market cap still has 100% gain.
Yeah, because of the new supply added.
Yeah, so you're back. So anyone that bought your coin at $0, let's say 1,000 or $1 is back at their break-even price, but the market cap grew by 100% and it's heavier to push up.
Yeah.
Now let's say you had a really bad day and it went from its original price to $1 down to 50 cents. Now your market cap went back to the original market cap of 1,000.
But the coin has lost half the value.
But your purchasing power lost half the value.
Yeah.
So that price I paid in the beginning for your coin, Will, it cost me because now I'm down 50%.
Yeah.
and the market cap is now at its original market cap.
Yeah.
So everyone's looking at the market cap going, hey, it's back to even. But any holder got smoked.
Yeah, I can see a lot of my gains definitely got smoked.
So this is what's happening on Algorand this year. Everybody's looking at these prices, but the market cap is creeping up so large that they're getting smoked on price.
Yeah.
When it comes down.
We need Scaramucci to drop another $1 billion.
So can you pull up Yieldly?
Yeah.
Yeah, so everyone gave me shit because I got out of Yieldly around 0.25 cents in August.
Damn, you were smart.
Because I did a whole thread on it, and I said Yieldly is a great token, but it's got the same problem Algorand does, and it's not going to stop. Is that its dilution per day is heavy. The staking, that is heavy inflation.
Yeah.
So on 8/30, the circulating supply was about 2 billion. The token price was 0.027, is about a market cap of 57 million, right?
Yep.
But now, on today or yesterday, the circulating supply is basically double. The price is in half, and the market cap is still just a little bit. The price is, well, more than in half. It's like 50-something% down, and the market cap is below what it was back in August, even though the price is much lower too. So to reach 0.027 again, like we had back in August, at current circulation, it would need a market cap of 100 million.
Man, hey, I'm like, if y'all watching this right now, pay attention. This is huge.
So
it's very huge.
So it's sort of understanding the differences between your token price and the price of the entire asset you own, because they're two different things.
So it's like we can say it was overvalued, maybe.
Well, right now it is, because the current total value locked, somebody big exited their liquidity on Yieldly yesterday.
I seen that some whale keeps winning over and over.
Well, no, taking their money out.
Mm-hmm.
Somebody took their money out because their total value locked was hovering around 140. It dropped to 88.
Oh shit!
So now
that's one whale.
So currently, they have 88. They have a current price of about 11 cents. Based on when I made this.
Yeah. Yep.
And their market cap is 45. And it's 80. It got 88 in regards to total value lock. So I think I was wrong. So it's still about half of the assets it owns in market cap. But if it were to reach 27 cents, 0.027, it needs a lot more total value locked to even make up for it. So it's a big game that goes on between what is being staked, what is being added, because dilution. So even all the people that gave Coinborough shit because he was talking about the tokenomics. This tokenomics was pretty brutal. I didn't even know about it. I mean, I knew it, but I didn't know the tenacity of it until, I had to do an evaluation of it. So let's look at Algorand versus other tokens. So as you can see, can you pull up the dilution market cap one?
Oh, wait. Oh, the ALGO.
Click on click on Bitcoin.
Wait. Too many tabs.
Yeah, you're doing all right.
Now, this is some good stuff. Bitcoin dilution, right?
No dilution. So look, the market cap, so you don't have to back it up, but look, the market cap and the price are pretty much overlaid. Because Bitcoin
I see the two
pretty much
lines,
no inflation. There's no things being added. So it's market. So if you
actually, I see. Wait, real quick, Bitcoin, because of the halving, this actually helps, right?
Well, right. I mean, because it creates supply shocks. But the point is, you're not seeing any dilution because there's really none. If you brought it back here, it's the same. So even though you're buying it here at this price, 38,000, it's still worth the same market cap. So that's where price and market cap match, and it's easy to follow. Now go over and look at if you look at all the other ones like Solana.
Let's go to Solana.
The Solana's pretty stable. I mean, there is a little bit, but it's not like what you saw back on Algorand. Algorand was a shit show. I mean, it was wide. And then if you look on over and you go to we'll say SHIB. Everyone talks about SHIB as being a coin that's endless supply and all this stuff, and that's true.
Yeah.
But at the same time, though, those jaws aren't as wide as it is on Algorand. There's about a 12% difference between the market cap then and the market cap back at this price. Algorand is like 30 to 40%. So we out-inflated on net than SHIB.
I mean, blows my mind, because I can see it, because all these zeros one would think in their supply that they're more inflated.
So they did inflate it because you can see the price dropping below the market cap. I mean, you can see that it's noticeable. But look at Algorand's again. So that's
I wonder what Cardano XRP is, man.
I already looked at them. They're pretty same. They're pretty stable. Okay. So what happens is you have a runaway dumping of supply on Algorand's market, which raises the market cap but suppresses the price. So look at Algorand dilution. Just click on that one again, one last time for the. Look at that.
Yeah, bad.
Look at that difference. 35% difference between the market cap, 1.08 there, in the market cap at that point.
Damn,
it's crazy. That's what we're fighting right now. Now
that's where we at.
It's not all doom and gloom.
Yeah.
Because there's 10 billion total supply. So we got our ass whipped this year, but I mean, there's only 3 point some left.
Yeah.
3 point some billion left.
Yeah, because we 60% of the supply is out, right?
Yeah, so we're about 67% of supply is out.
So what happens when the full supply is out? What you thinking?
That's the fully diluted market cap.
Yeah. Yeah.
So, instead of trying to follow it, you can just follow the fully diluted market cap. So once that's fully diluted, the market cap and the price will realign.
So yeah, then
does that make sense?
Yeah, it does. Yeah.
So as you can see, each dilution we saw, the market cap gained, but the price was pushed down.
Mm-hmm.
And so that's why Algorand is getting smoked. And from token holders, because they're diluting and they're dumping supply on the market, and the market cap's gaining because they need to dump these supplies to either fund projects, accelerate vests, or whatever. But when it's a double-edged sword with all this Algorand funding, because they're releasing tokens to fund them, and that comes at the expense of the shareholders.
Yeah, damn, we in a situation right now.
Well, I mean, we've been in a situation, but now it's us figuring it out. So this is also what I wanted to really point out. The next thing, can you pull up AlgoFi?
Yep. AlgoFi. So not this. Yeah.
So this is why it's very important, because remember, leverage can get you killed. And, AlgoFi came on recently, and they're really great. I use them.
I like them,
but I just wanted to put this on as a little bit of an aside for people to just sort of to keep safe.
Some caution.
Because as we remembered, the market cap stayed the same, but your token price got smoked for nothing more than dilution. There wasn't even that much selling. It's just raw dilution.
Damn.
So remember, that pushes down your token price.
Yep.
So anyone taking out leverage using ALGO as collateral needs to be aware of that. So if you remember, so when they opened this up, I think Algorand's price where you could start was about $1.75 per algo.
Yeah, it was. Yeah.
So if we supplied 75,000 algos, our asset value is 131,000, and let's say we borrowed 52,000.
Yeah, that's a 66%. Yeah, max borrow.
Here's the difference though. I found on them. I've been tracking that. They say you can borrow at 80% your max borrow, but it's more 66%, because they have some weird calculations. Whenever I finally found 66% is the number that matches their max borrow on the website. So that should be automatically what you should put. At least that's what I do. And then if you say the borrow utilization is, I borrowed 52 of 86, that's 60%. That's below the requirement.
Yeah.
Right. So, but let's say I was oblivious to the dilution that's happening and the price plummeted like it did today. It hit 105.
Fuck, I know.
Then our asset value is now 78,000, and our max borrow dropped over 30,000, 35,000 to 51. So if we did not know that fact, and we borrowed $52,000 a week ago, 2 weeks ago, 3 weeks ago, you would have been liquidated.
Yeah, got wrecked.
You went from 60% to 100% real quick. You got liquidated, because it's a computerized liquidation. There is no one to call.
Well.
So what I recommend, what I always do, is I cut the market cap at least in half. So
why do you do that?
I've done, because it's a margin of safety. So I always put my when I borrowed, I put in my calculation here that my asset, that algo is worth 85 cents. because that's what I think
So you
about.
basically played it off of that.
That's what smart. I think. That's what I think bottom could be is 85 cents. So that means that I looked at it, I plugged in, let's say I wanted 52,000, but I'm saying my Algorand token's 85 cents. Mm-hmm. Well, I couldn't borrow that because my borrow utilization would be 124%. So I know I got to go way lower. So
you gave yourself a lot more wiggle room.
I do it two ways. So one way is they drop the token price. It doesn't have to be 85. You can go up. But what I also do is I do my max borrow from 66%. I drop it down to 55. So I have 2 layers of protection. I'm decreasing the amount that I can borrow.
And by cutting it in half yourself. Yes.
Well, I'm cutting the price in half, which lowers my asset value that I can borrow against.
Yep.
And then I also lower the percent of that asset I can borrow to a lower percentage than what they require. Mm-hmm. So, I have a large, I borrowed a lot, but I'm sitting fine because I factored this in before I even borrowed anything. And you can use that to borrow. So it is, that's why I just wanted to talk about that real quick, because they're leveraged. I mean, it's fun and it's great that it's coming to the ecosystem, but it's more, I just wanted to really tie those two together with the impact of the dilution on the token price and people leveraging money to borrow, to stake, to whatever. Because if you outdid yourself, you're at risk of getting smoked.
Yeah. Damn. So that's some good info there, especially for ALGO 5, everybody that's tapping in.
Yeah.
In the future, because when I did do some borrowing, I borrowed at about $1.30. So definitely a little bit more riskier now that the prices have dropped. But we at, I think, $1.15 right now. But $1.05, that's scary.
So let's wrap this up here. Can you pull up the oh man, where is that one? Can you pull up on the one algo related? Can you pull up the Nupal?
Nupal, yeah.
Tell me to get that up.
Yeah, I got it. You see it?
Okay, so I added this little thing. So if you follow my Twitter account, on December 22nd, I said the spring is being loaded. And
spring is being loaded.
So as you can see right around that yellow line at the bottom, you can see a divergence between the net unrealized profit loss and the market cap of Algorand. Because I don't follow the token price. Following token price is a mistake, as we've seen.
Yes.
But so when you talk about Nupal for Algorand, it's a very important thing to sort of understand.
Wait, real quick. Break down Nupal. What does that mean again?
So I've borrowed this from Bitcoin, which basically is Nupal is net unrealized profit loss. It looks at the difference between unrealized profit and unrealized loss.
Okay.
To determine whether the network, is currently at a state of profit or loss. If the Nupal is greater than 0, then the network is at profit. If the Nupal is less than 0, then the market is at a loss, right? And so we can see that there's been a lot of people selling at a loss because the Nupal's been negative for since they diluted on the 5th.
Yeah.
Right. But what I saw here, when you see that it was rising at that time, even though the market cap was continuing to fall, you could see fresh buyers coming in. And so you get this divergence between the market cap falling, but yet you see people buying and adding.
You would think new buyers?
Yeah, or new buyers, or people are re-adding to their position, and it's now offsetting so basically if you have people selling, you have bigger buyers offsetting that and making it positive. So that's when I said the string is being loaded for that run from 130 or 125 to 180, 190, because that difference, you can find that. And when you're screening the market cap versus on-chain metrics that you got to study. So it's a very important point that there are ways to sort of find these picks and points in the market for companies like Algorand, but you gotta factor in all the parts from the dilution and all that other stuff that goes on. So can you pull up right next to that slide? It's the Delta POC.
POC. Yep.
So you pull up this chart, and you can see that right here this is the delta volumes you see throughout the day, where the prices are being sold at. So you can see in the I have it where the sort of the orangest line is.
Yep.
That is where the most volume was traded during that time period. And this was set on a monthly, form.
Mm-hmm.
So that's why it said right here that the point of control all the way back to June was $1.05. What did we hit today and bounce off of? $1.05.
$1.05, yeah.
So that was the real bottom. That was at least the bounce. Now,
so we thinking $1.05 is the bottom?
That based on this one. Now, if you change it to weekly, you can get some difference. But I'm thinking I think the real bottom is it's either $1.05, but if Bitcoin drops, I think we'll go to like 80 to 90 cents. But I do not think we reach much lower than that, because if we again look at this sort of the market cap that would happen to Algorand, it would be punishing, because if it went back down to like 60 cents, I think the market cap would have lost like, if we go down to 60 cents, I think the market cap drops like 89%.
Jesus.
Which is like a major bear market.
I was like, that's crypto right there. Geez.
Well, that's a bit. I mean, and if you have leverage, you're smoked.
Guaranteed.
So I know the use cases are developing, and I know we have more DeFi. So the more of these things are online, the better. And I think this is just a cost you have to pay to be a part of a growing network.
Yeah, we're early.
We're early, but we got penalized for being early.
I know that.
Someone could buy in right now today
and be killing it, yeah.
And have a higher market cap, but get a better price position than people that bought in, or if they bought in like a month or two ago.
Yeah. Damn.
So it's just about understanding, and even I didn't understand how bad it was. But this was, remember the year I talked about, this was a really bad inflationary year. Now the foundation is saying they're not going to give really much any token rewards anymore, which we see that happening.
Yep, only governance only.
Yep, only governance, and the accelerated investing is over. But the one thing we can't control is they can still dilute when they need to fund projects, which is at random.
Yeah. And
I saw that happen with Yieldly. I remember I was following the tokens, and I saw them dilute it by like 9% on a day. And I'm going, hell no.
Getting out of there. Yeah, so you sold at a good spot. And then, I
saw them, I saw them diluting, and there was no news about it. So again, this is just.
Thanks for breaking that shit down. Yeah.
Yeah, so I just wanted to jump up back on your show. It's always good talking to you.
Yeah, for sure. Let me do a closeout real quick. For the audience, again, there's so much jewels in here. We're definitely going to be cutting this up for y'all and breaking it down in multiple shorter videos and also a long extended one. Again, Marcus, I appreciate you, because you're bored hitting with all the data and historical facts. You got my wheels turning, I'll say for sure. Gotta go talk to my lady about this. Like, oh shit.
But yeah, again, price, follow the market cap.
Exactly. You got last words you'd like to say to the audience before I stop this?
Yeah, no, it's always great coming on your show. I do love just being able to chop it up with you guys. All the Algorand token holders right now that are feeling a little bit of pain, don't worry. This is the necessary problem, but it's pretty much out of the way. And I think once a lot of these things come on board, it's going to be rocket fuel. So although it seemed like I might have had a pessimistic tone, it's just me laying it out what it is.
Yep.
But hey, I haven't sold a token.
No, I bought more ALGO. So yeah, shout out to the ALGO fam. All right, we going, y'all. Algorand. See the crypto, a digital face, 2021 fiat replaced. Had to have it, bank account.